All right, welcome everybody to the next session. The very narrowly defined topic of the three big questions on the future of banking. So narrow, I say, because the answer to that's really clear. Depending on which conference you go to, the answer to any of those questions is definitely blockchain. So nice short discussion for us today. I am Edward Budd, Chief Digital Officer at the Transaction Bank at Deutsche Bank. And I'm joined by three fantastic panelists to get into three great questions today. We're going to break those up into quite bite-sized chunks around strategy and competition, around talent, leadership, which was a really great session a couple of panels ago, and last but not least, our very favorite piece on regulation and how that's helping in our markets, or what opportunities that's going to bring. Before we get into that, quick introduction from each of our great panelists today, representing really different players in the exciting time in the changes in financial services that are going on. So each in turn, perhaps starting with you there, Anne.
Hi, I'm Anne Boden. I'm the CEO and founder of Starling Bank. And we're a new entrant digital bank in the UK for consumers, but also we're providing a marketplace and banking as a platform.
Hi, I'm Frauke Mispagel, Managing Director of Axel Plug and Play. We are a joint venture between... Is that me? Is it?
Oh, change microphone time.
Is it better? Yeah? So we are a joint venture between Axel Springer and Plug and Play Tech Center in Silicon Valley. And
We're going to go back shouting.
Maybe you should
try again.
First.
Let's see what Markus is working. Can't hear him. Oh.
Can you hear? Yeah, well,
no,
you can maybe read from my lips, and this is easier. Markus, Rupprecht, I'm the founder and CEO of Traxpay, and we enable the bank's B2B networks. So you go again and try.
Let's try again.
So do you hear me now? Yeah, okay. So yeah, we invest in very early stage startups in the digital space across sectors. So we do fintechs as well as media, tech, digital health, whatever we find. And the startups stay with us for 3 months. They get mentoring, coaching. We invest and we get 5% of their equity.
Great. So on the far side there, a real successful competitor, new entrant coming in. One of the great things that we've seen exploding in this space, the partnership of accelerators with perhaps non-traditional firms stepping in and helping those incumbents. And then Markus here in terms of the fintechs and those that are looking to leverage that new technology and come and bring services and partnership into some of the incumbents. So the big first question that we're talking about today is on the strategy side and what's changing in the players, how players, new and old, work together. The sense of collaboration, co-opetition, are these things really real? So perhaps some different perspectives. And first from Anne, but as one of the successful new entrants as a competitor, what is it that's driving that success, given we haven't really had too many new entrants in the last 25 years, in the last 24 months? Just a large explosion in lots of different parts, particularly in the UK.
Well, there's a couple of things happening. Post-financial crisis, 2008, 2009, there was a change in regulation that encouraged new entrants because you saw a lot of consolidation in that time. Secondly, consumers are demanding more. Consumers are used to having lots of services in other parts of their lives in their mobile phone, such as, Amazon's changed the way they shop, iTunes has changed the way they buy their music. And finally, technology has made it possible. It is now possible to create something that's never been done before. I was 30-odd years in traditional banking as a computer scientist originally, and I spent a lot of time in the traditional banks running very, very big organizations. But that was actually holding us back. And what we actually have at the moment is a number of new entrants, probably a couple in Europe, one or two in the UK, that are coming together with very, very new business models and also delivering it on very, very new technology.
Great. And maybe a slightly different take on that, Markus, in terms of the collaboration piece. So there's the co-opetition piece or the pure competition piece. Collaboration, it's talked about, it's reported a lot. But in terms of partnership, I suppose, what is it? Are you really seeing a genuine desire for that, or is that more in the press than in reality?
I think this really depends. You have to look at this case by case. There's just been done a research in Germany on the cooperation models on, especially B2B fintechs. And as much as nowadays many B2B fintechs claim to be the partner of the bank, it's very often the case. It's very often the case that they tell the banks, well, give me your clients, and say thank you, which is obviously not a perfect cooperation model. So it really depends. But I also think that there's kind of frustration on both sides because both sides don't really understand each other very well. Typically, most of the startups don't have the experience what it means to sell into a bank. A sales cycle into a bank. Even I was selling it to banks, and the banks wanted to have the product, and it took more than 6 months. Just imagine a startup is selling something the bank didn't know that they want. So this definitely takes, sometimes more than 6 months. And this is something which obviously leads to frustration on the startup sides, but also on the banking side, I think there's a lot of frustration. What we realize that whoever you talk to wants to do this and believes the strong value proposition of the startup, but doesn't have the power to push it through. So there's a lot of, thing happening in banks that nobody's taking the decision. Every single person wants it. And I think this is the frustration is kind of balanced to both sides, and it's going to be interesting who's going to win the balance. I think that's a nice and practical perspective. You see a lot of things advertised, and the thing I'd pick up there on the positive before maybe we come back to some of the more practical and the pitfalls that we see. One of the things that we certainly do is explicitly partner to try and create that culture and the right environment to create new and different products as much as also evolve the culture. So Frauke, maybe from your perspective, both what you do see that is happening in that collaboration space, but also maybe what more is happening outside of that in other industries that we need to take a look at as financial services.
Yeah. So from my experience, I mean, it's not just a question in the financial industry. So any industry where incumbents try to work together with startups, it's actually, they are all facing the same problems. It's always the incumbents who kind of look at the startups and think, oh, there might be something coming up, maybe something disruptive, it might be dangerous for us, so we better don't talk to them, which is the wrong approach, I think, because there will be disruption in any case. Either you are part of it and benefit from it in a little way, in some way, working together with the startups, or you'll be disrupted and then you are on the losing side. So first of all, there needs to be openness on the incumbent side to talk, to explore, to find ways to benefit from each other. And on the startup side, again, it's similar. A lot of times the startups think, okay, they've got the consumers, they've got the infrastructure, so we leverage on that, but they don't think before approaching the incumbents how this can be a beneficial situation for both sides. And so I think on the startup side, I would say the startup first needs to be ready to have an infrastructure in place, processes in place, to be able to work with a large corporation. And a lot of times the startup, the founders, they are young and experienced, maybe haven't worked in larger corporations and don't understand the way of communication in a larger corporation. So there needs to be homework done on both sides, and in the center of it all, it needs to be beneficial to both sides, and openness from both sides to kind of try to talk the other person's or institution's language.
I think that's a great point on the communication piece. It's certainly, so maybe a reflection from a lot of what we do, that can be one of the most frustrations that we see on an inbound process, is it takes too much time to get to the actual nub of what it is that somebody's spent some great time solving a particular problem and really articulating that in a way that that value proposition is super clear, and therefore it gets to the right place. But I think the same, the frustration you're articulating there, Markus, around even if you get it to the right place, do people really make decisions? Or I heard, I was on a panel yesterday on how many people do you need to make a decision, is one of those other frustrations that startups feel coming in. Are there others, or are those the main ones that you see as you try and interact?
But I think, you also have to be realistic. Every startup who sells to a bank, it's not necessarily a B2C play, it is somehow a B2B, and if the B is a business or a bank doesn't really matter. And what qualifies this kind of business is always that if you have done the sale, you typically have some recurring revenue from that. So it's not like a B2C play where adoption rates are really, really high and faster, and you can count new companies or new clients every day. Having said that, there are a lot of companies out there who have 100,000 and more users, but they still don't get any revenue from that. So, what I'm saying, I think you really have to, level out and leverage, the one side you get faster adoption, but what do you get out of that? The other side is really much, much harder to achieve, but once you have achieved it, the sustainability seems to be a little bit higher. I mean, look at Salesforce. It took them a very long time to get where they are, but now they're a very, very good, successful B2B company. And I don't know how hard it was to sell SAP at the first days. I couldn't possibly imagine, but it was probably the same.
No, it's a great point, and the way I would perhaps characterize that from pieces I've seen is, being clear about where in an organization or where in a value chain your proposition fits. It's very different coming to sell a core component to a bank than sell something that is a value add to a channel or a value added service, or indeed is a fully complementary, as Christian Saving was just talking about for us, a beyond banking type product for a particular segment, depending on what box you fit in, and they're not clearly tied boxes, but where you fit in that spectrum depends on, I think, the sales cycle, the difficulty of integration and all of those things. Yeah.
I'm really seeing all sides of the argument here, because I was a CIO in a traditional, big bank in RBS and ABN AMRO. I'm now a startup bank, and I spent many, many years avoiding those difficult conversations where a business person had met somebody at a conference that had a startup and wanted me to buy that software. Okay, and that was embarrassing. You avoided, that conversation, because people are dealing with huge risks. And people as CIOs and running large organizations in big banks have to minimize risk, and buying either software or a service from a startup is quite dangerous. And since the crisis, people are much more risk averse. The environment's changed. It's much more difficult nowadays to take those bold decisions in an organization in a bank than 10 years ago. We're a startup bank, and I took the decision. It was actually easier to start a new bank than build software to sell into a bank, to be honest, because I've been on the other end so many years. And I think what we have at the moment is the world has changed. It is possible to bring organizations together in a very much a plug-and-play point of view, using open APIs. And what differentiates us as a new entrant bank, as well as having a B2C offering, we also provide services to other fintechs that want access to payment systems. And I see the frustration where people have spent ages trying to get to payment systems through existing banks, and both sides have been trying to make the relationship work. The big banks are full of great people who are trying to do a great job, but the problem they're trying to tackle is huge, in that they have to get the rest of the organization to buy into these solutions. And it's very, very hard. And what's happened in the UK is at the forefront of change. But in most countries across Europe, it is still very, very difficult for fintechs to get access to those services.
So I would have been your ultimate nightmare then as a chief digital officer, meeting almost everybody and bringing them all to you to integrate in a couple of months, because that's what the sales pitch said. Now, the challenge is there, so maybe if we move that on just because there's a couple of bits I'd like to come back to on how we deal with some of that, because there's clearly from all different parts of those competitors, those trying to partner, the desire is there on all sides, but there are clear blockers. So one of those, you mentioned good people trying to do good things, Anne. So the question of talent is the next one. Rather than get into technicals and products and those aspects of big questions in banking, talent is one that's perhaps not talked about enough. What does it take? You've been in banks, you've seen that you're running digital leaders of today. What is it that makes it successful to attract talent into your type of environment? And maybe then, what's the bigger challenge that an incumbent might face, very generically?
I think that, especially on sort of fintech startups, is quite difficult because you have to have the combination of experience and banking knowledge to reassure the regulators, whilst at the same time building a tech company. And at the early stages of the organization, all startups are, there's more fail than succeed. And therefore, attracting that talent at the early stages to an organization that has regulatory responsibility is difficult. Once you're doing well, you can't, there's so many people who want to work for you. The bit in the middle is difficult. We are now in the situation where we're 3.5, 4 years into our life, life where we can attract the best engineers in the world and the best product people in the world, and attracting some of the best finance people, banking people in the world, it's a bit hit and miss, because it is a very, very different world than working for a traditional bank.
That's interesting. Markus, having seen it, and then you obviously recruit people into your enterprise, what are some of the key ingredients?
Honestly, and this is very pragmatic. I've seen, while I was working for Deutsche Bank, this was, in the hype years of 2000, everybody wanted to be an investment banker. Although there were so many startups in place, I remember I was at a recruiting event at Deutsche and everybody wanted to be an investment banker. And it was so funny and, getting really hilarious because I was talking to them and said, listen, if you want to be an investment banker, give me a job description of an investment banker, because frankly, it's like saying I want to be a doctor, because it's a so diverse scene. And as it turns out, everybody wanted to be an investment banker because guess what? They were at that time earning the most of the money. And honestly, I don't want to, disregard most of the people here who are startups. Sometimes, especially in Berlin, I have this feeling that people just want to be an entrepreneur because this is the new hype to get rich quickly and probably not have too much of a work to do. And this is why I think what I want to say is that people go with the flow. I think right now it's very hip and very modern to be an entrepreneur, so guess what, I'm going to do this. I just got to know a very, very good young kid who came from law school, best law schools in England, and I said, listen, honestly, if you want, let's be really honest here, if you want to get rich, better go to a big law office in England, because the likelihood of, getting rich in a law office is probably as high as getting rich in even Deutsche Bank, but much higher than getting rich with a startup, because guess what? 97% of the startups are going to fail. So I think it's a hype. So I think, if you ask me how banks are able to get these talents back, you just need to get into this, positive hype cycle again. Probably when all these bubble bursts, and, most of them will burst, this talent will shift. But, right now, we realize it's very little problem to attract talent from banks, because they come to our office. It's a nice hip office. It's very cool, except today, because today I think we had 47 Celsius in the office, so it wasn't cool at all. But it's very hip, it's very cool, it's very trendy, and people like to work there because they realize they can make an impact. Everybody who was in charge of doing something at Deutsche, being a coder, even if they were in Frankfurt, you don't see your outcome, you don't see your impact. And I think this is what people drives there. But it's a different scheme if you ask, what makes an entrepreneur and why there are so many entrepreneurs out there, or what makes people work with a startup. And I think, honestly, and this is the second thing I tell them every day, if you work for a startup, not as an entrepreneur, as a founder, but at a later stage, there's only one reason to do that, which is you have more fun. Because again, the likelihood of being, employee number 57 and getting incredibly rich is very low. I mean, face it, there's probably, I would say maybe PayPal, the first 100 employees got, really rich. All the others did quite well. But, then PayPal is 1 out of 1,000. And I think, really, what people should look for in a startup is a very, very fruitful and fun environment where they can learn a lot, but also do a lot and achieve a lot.
Yeah.
Very, very true. I think that we are going through an age where fintech is very fashionable. I think being an entrepreneur, being a startup is very fashionable. You can basically dine out every night of the week in London on the fintech scene. It is very, very cool, and it's all awesome. But we are going to a situation where there's going to be another wave. We went through the investment banking being fashionable. We went through the law firms. We'll go through this. I think that in the meantime, some of our industry will actually transform. I've been in the banking industry for 30 odd years. Nothing much has changed. I think we're on the start of something different happening, but it won't be all done by sort of 3 guys in a bedroom. It's going to be done by people who actually understand new business models and can put the right sort of talent in place from the right sort of sources and really drive through to customer satisfaction.
That's a great segue. So maybe Frauke, you see a real mixture of those two things, both in terms of new and interesting startups coming in, but people from incumbents coming in and working with them, not just with our JV, but also outside of that. How does what the guys have said fit with what you see?
Yeah, I mean, I think one thing I would say is any incumbent also has to be very honest about who the talent is that they are looking for, and I'm totally with you. It's very hip at the moment to be entrepreneur, and I think a lot of corporates have the feeling they need to attract entrepreneurial talent. However, I think there's a huge difference between an entrepreneur and an employee in a corporate. Yeah. And an entrepreneur by heart will probably never be happy to work for a corporate. So I think it's also not the right approach as a corporate to try to chase those talents, because they are an entrepreneur, they love their freedom, they will always stay entrepreneur by heart. However, I think there are employees who have an entrepreneurial way of thinking, and these are probably the ones, as a corporate, you want to attract to kind of start changing culture into a more entrepreneurial thinking culture.
I actually spent 30 odd years in big banks, and then I stepped away for a year. And I stepped away for a year and worked with startups. And I realized a lot of the things I really believed in were just wrong. I'd been, sort of brainwashed into believing how things could be done. And technology had moved on, and the regulation had moved on, and I was so focused on traditional banking and the old way of doing things that I hadn't noticed. And I went into another big bank with those ideas. And some of those ideas worked, and people were receptive. People want to be successful. Most organizations, even the biggest organizations, want to be actually very responsive and very agile. And you can go a long way, but I couldn't go all the way and quit to start my own startup. So I think there's ways of actually taking people out of banks and putting them out into new organizations, and people will absorb a different way of doing things. Organizations change all the time, and I think it's really worth investing in immersing people in the way things now are, because I know very well that lots of things I knew to be true turned out to be wrong.
I think I totally agree. I think you need to take, I mean, there are good talents in the incumbents world already. I think putting them in a different structure and away from their daily organization that they have been knowing maybe for years and 20 years or whatever, this helps already to drive innovation, creative thinking, and to help them, to lead them into a little bit different directions. And apart from that, I think if you really want to attract talent from the outside, or at least, let's say, from the experience of Axel Springer, for example. It's a company that went through digital transformation quite early. They started quite early. And I think what they've done really well is when they started acquiring companies, majority style, so they acquired digital business models, majority acquisitions, but they always kept the founders on board with earn-out structures, and a lot of them are still on board. So they are still running their own companies quite independently. They are not fully integrated into the corporate world. So they are still entrepreneurs in a corporate, or let's say owner setting, but all these entrepreneurs are part of like the management team of the corporate, and of course they exchange ideas with the original group of management team of the corporate, and of course there are new ideas coming in through that way. So I think this acquisition hire strategy has actually worked out quite well for Axel Springer, for example.
I think it's certainly one of those that I think we're yet to see that at the boardroom level of those changes take place in incumbents, but certainly in other industries, that's, I think, more and more prevalent, where the incumbent actually acquires somebody and even elevates them to CEO of the incumbent. So perhaps one of the things, there's probably a lot to learn from other industries on the talent front. That's one to watch out for, maybe at incumbent financial institutions. So last but not least, and I've left as little time as possible to go through it, is that third big question that you can't have something on the future of what's going to go on in this place without talking about regulation, and perhaps in the pro and the con. So maybe we live in a world where there's a huge tipping point perceived around open banking coming, both from a regulatory push but also from a consumer B2C move into the B2B space. On the flip side of that, we still live in a world where we have GDPR, MiFID II, so on and so forth, in terms of the retrospective view of changes, structural balance sheet, market structure that the regulator needs to do post-2008. What's your gut feel at the moment, and for regulation being genuinely still pushing forward and opening up versus protecting, the weight of regulation, protecting incumbents through the sheer raising of the bar to get into that space?
Well, I'm a Brit that actually quite likes European legislation around payments, okay? PST1 gave us the payment institutions. PST2 gives us open APIs. The UK government has been front-running the implementation of that under the banner of open banking. It will, if it happens, it'll change retail banking forever. Will it happen? I think it's in lots of people. It's very, very difficult to do for an incumbent bank, right? And it's not in everybody's interest to do it. And it's difficult, and it's hard to implement. But my betting is that it will happen. We as a bank launched day one with open APIs. 3 or 4 years earlier, somebody came into my office and said, this open API business, we're going to let customers have their data and they can take it to other banks. And I say it'll never work. Now I'm saying, it's been mandated. It will happen, and it's going to change the value chain of banking. You're going to have the situation where the back end will be done by one bank and the app by another. It'll take that value chain and pull it apart. And if it gets pulled apart and the customer benefits because you have more competition from prices, being far more competitive, that's a good thing for consumers. And I think that's the heart of what we should be doing. Mm-hmm.
Where does it sit on your radar, Markus?
I just 2 weeks ago in Berlin, I heard this excellent quote: "The customers don't care about your good reasons for bad products." Mm-hmm. And I think it's been way too long that banks are hiding behind regulation for bad products, because I'm absolutely sure that what regulation doesn't want is bad products. Yeah. And when it comes to customer care and customer satisfaction, this is what most of the regulatories will look at. In fact, to be fair, they haven't probably looked at this like that in the past, but I think it will be a very important point in the future. And again, you can have millions of good reasons for bad products, you will not succeed. And I think this is the new big change, and this is, I think, why banks have taken this new hype fintech up so well, because as a matter of fact, I see fintech as an outsourced R&D department for the banks, where they can look at and really realize what the customer wants, because frankly, no bank really knows what their customer wants. I've just, probably a year ago, I was in PayPal's studios in San Jose in California, and they have this tour, where they're showing all their innovational stuff, and it's probably only 20% they're showing, obviously, because all the rest is hidden behind the scenes. But I was there with 50 bankers, and all the bankers, saw these payments innovations, and they got, big eyes and were totally overwhelmed. And I asked him, listen, guys, why don't you do this? I mean, payments is your core business. You can have an, outlet like this, and you can ask customers and examine their reaction and all that, and still banks don't do it. So banks don't know really what their customer wants. I can give you an example from Deutsche, but I won't. But it's just banks didn't care, and now they realize that they have to care because there's something on the horizon that might be scary, and so they do that. And I think it's a very clever position that they are now trying to evaluate all these different fintechs and to see who they can benefit from. I mean, it's a hard thing because you have 27 P2P schemes out there and 570 small-term loans and whatever is out there. But it's better than before, where they didn't have a chance, and only the product guy seemed to know what their customers want, and frankly, they didn't.
No, so maybe a perspective, Frauke, you see a lot of the projects in there. Does regulation pop up as an excuse for not doing any of those creative ideas that you see in the incubator?
It doesn't pop up as an excuse, but it's true that, especially in fintech, I mean, the licenses you have to get to be a bank or whatever, as far as I know, I'm not really a specialist, but as far as I know, it's very cumbersome process. You need a lot of cash to actually apply for one, etc. So there are steps you need to take, which are not easy to take for any startup. But I mean, there again, it's somewhere where incumbents could also see it as a chance to actually work together with those kind of startups that come up with innovative ideas, but maybe don't have the resources to go the fully regulated way. And for example, Solaris Bank, what they have been doing, I mean, kind of having a BaFin license as a service, kind of, and then create an ecosystem around it, what FinLeap is doing. I think that's a very smart way. And I think they started doing this now in fintech, and I think you can probably transfer that same mechanic to other regulated industries. Someone solving the big regulative hurdle as a service and then create an ecosystem of products and services around it. So I think it's very smart. And maybe about, as banks, incumbent banks, I mean, there are ways to think about how having the regulation and being regulated can also be of service to these kind of innovative products.
It'd be great to make something out of that.
Yeah,
Perceived
not sure how, but I'm sure you find a way.
It out. No, I think it's a big question about what the future of banking, what its role is in a trust network outside of those very traditional product sets. And there's obviously a number of people on the main stage talking around data-driven models, around identity-driven models, or low balance sheet models, as Christian was referring to earlier. So there's definitely, I think, a sense of change from that perspective rather than what historical regulation perhaps gives us an excuse not to do. Maybe to finish off, given the audience here, we've talked a lot about frustrations, things that may or may not be excuses between fintechs and incumbents. What would be your one piece of advice for fintechs, that are here in terms of, keeping on going or focus on the business proposition? What's the one thing from all the frustrations that you've had on both sides of the fence? What would you say?
I think we're in a race. I think we have the fintechs that are raising customer expectations, that are tackling big problems. And you've then got the big banks and the incumbents that are very, very capable of copying those ideas and creating those ideas. They're full of very, very good people that have lots of capital to invest. The question is, can those big banks reduce their cost base fast enough to match what will inevitably be in this industry? It's not that the products won't be innovative enough. It's a question of whether cost bases can be shrunk enough, fast enough.
Any answers? No.
Maybe what I would tell any fintech, like especially early stage, actually not to worry too much about the regulatory side, as long as you create a service that a consumer wants, even if at some point it needs to be regulated. Don't worry about it now. If you come to the point that you have to worry about it, you've already achieved a great deal, and then you find a way to get the regulatory stuff done. But don't shy away from this industry because it's regulated, because if you find a product that works, you'll find a way to master regulation as well.
And I think I have a great story on this. And when Square was founded, I think this was 6 years ago or something like that, Jack Dorsey announced it at NOAH Payments in Seattle, I think it was. And when he announced, basically every smartphone can now accept a credit card, the 2,500 bankers in the room really had a very bad mood. And then they did a panel discussion, and Jack was asked, Jack, how do you do KYC? And he, as he is, he said, oh, this is easy, I know this from Twitter. And obviously all the 2,500 bankers were laughing because they said, oh, they do it like Twitter, so we don't have to worry about it. Now what turned out to be, 4 months later, they got a money injection from Visa for 20 million. And with 20 million, you can solve any KYC problem. And they are, one of the most successful providers in the space. So I think it's a very good example, that you shouldn't think too much about regulation. What you should think about, though, is really your product. Because as I said before, if there are 27 P2P schemes out there where none of them really know how to make money from, it's probably not a smart idea to get the 28s in place. And I have been approached by so many people who do the copycat of the copycat of the copycat. I think, the best advice would be try to get as much feedback as you can and listen. And maybe, the great idea you have is not the great idea you might have thought it is.
Great. I've left a couple of minutes for questions, I think, just about. Are there any questions out there in the audience for the panel here today? No? Super. Well, that leaves me to thank my panelists, and Frauke, Markus, thank you very much indeed. Different take on those 3 big questions. Thank you for your time.
Thank you.